if you have questions of me or questions of any of the team members, please ask. Open discussions. Yes, John?
If I'm interested in putting retirement money into this fund too, I'll also add taxable money in it too.
Mm-hmm.
Is that going to be all under one subscription, or do I have to have a separate one for?
Separate. Because your custodian of your self-directed account actually owns the account. You're the beneficiary of it, but they're the owner of it. And it's a different tax ID number. It's their tax ID number because they have to do the tax reporting. You know, a great thing about a fund like this, if you don't have a Roth, you should get a Roth, and you should put your money in a fund like this because Roth income grows what? Tax free. So if you're going to have a substantial amount of money that you're earning and it's tax free, it makes sense to put it into a fund like this. I love tax free. Pardon me? Right, you know, and I think the mistake, because I'm developing a book, I'm not a book, a course now with Trek about how to teach real estate agents how to do things properly besides just take their commission check and go on shopping spree. Most of them do that. But anyway, teach them how to set up their own LLC, so their commission checks go into their 100% owned LLC. They pay themselves a paycheck, and then they can set up a Roth account and pay it out, just contributions out of their paycheck. I mean, $5,500 a year if you're under 50 or 55. I don't know. I pay. I'm $6,500 a year. Yeah, and that $6,500 is growing tax free for me every year. I just put it in. It's
It's
like,
tax when you put it in now.
well, I'll pay taxes on $6,500, yeah, but on all the earnings it's tax free.
That's correct.
But I pay myself a paycheck out of my holding company, so I can do that. Then I have my traditional IRA, and then I have my SEP IRA, which means that my business can contribute 3% of my salary to my IRA, and it becomes a tax-deductible expense to the business. So there's many ways that realtors are not taking advantage of how to set up their retirement. So
You're operating as a self-employed person instead of as a business. And what you're talking about is operating.
yeah, and not only that, not to mention the benefit of limiting their liability by operating under a business name or a business entity. And so I'm developing this course through Trek to teach realtors, especially young realtors, how to start thinking in terms of protection and investing their retirement or for their retirement. I mean, they need to do it because I'm a boomer and our generation is going to wipe out Social Security. I guarantee you that. We're probably going to live forever. I'm sorry?
Live too long.
Mm-hmm.
That's how we're gonna do it.
Yes.
Can I
Yes.
use other accounts, like he has a Coverdale education account?
Yes, you can, as long as it's through a custodian. And they do set up those education accounts.
Yeah, I mean, he has one now that he loans money on, so
Mhm.
to people, so he's a hard money man.
Good job. Teach them young. Yes, Morris.
Here recently, I attended one of those training programs in San Antonio. And to get started in learning how to do that, the liens was $1,500 initial cost.
Mm-hmm.
And then in order to get into it much deeper,
Mm-hmm.
$5,000.
Mm-hmm.
And the material and everything else, that didn't even include that.
Right.
And I just turned my IRA over to.
Brian had to leave. His wife texted him, I'm ready.
I had an IRA with the credit union, and it was doing pretty good. So I had it for the past 5 years. When they renewed it, it went down to 0.33.
Mhm.
And that's when I turned it over. And you all have it here.
Right.
And it's making money. You can't go, I'm sorry, I'm not trying to set the table wrong.
Barbara and Morris have been investors in the Pride of Austin funds, which are debt funds, for a long time. And I'll share a little story with them. I shouldn't. But I remember Morris calling me one day and he said, David, my accountant just told me I got to stop preaching. He's a retired preacher. He goes, I got to stop taking money from the preaching of churches because I'm making too much money and it would put me up into a higher tax bracket because you're making me too much money on these funds. Is that correct?
That's correct.
And I thought that was a fun thing to know, how it impacts people when your investments start impacting, where you have to start really seriously consider your tax consequences from that investment. That's a positive. Pardon me?
If you're working for yourself, you're working for them.
Yeah, exactly. So, we hope that you would like to at least come to our lunch and learns. They're free. I've been offered many marketing companies have tried to lure me in with a really nice contract to be their little spokesman guru, and I refuse to do that. To me, education should be free. We are going to develop an education series, which would be free to our investors and would be a cost to other people because they're not investors, but we'll make them investors one day. But, you talk about those guru classes. This is a real sad story. I get a call from a real estate broker in San Antonio on Monday, and she says, I have a client who went through one of these programs. They put $5,000 down on a house with a wholesaler. Oh, this is really complicated. You know what I think about wholesalers. Anyway, and they have to close on Wednesday, and the partner, the person that told them that they would always be the finance partner if they go find houses, has disappeared. That after she put $5,000 in earnest money and paid $10,000 for the program. Those gurus that you pay money for usually are not there to help you.
She lose her money?
What we're trying to do is, she did, but she's not, and here's why. They called me and said, David, would you come in and make the loan, blah, 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 blah. And I said, I will not close with a wholesaler. And so David does his little research and finds out that that particular piece of real estate is a HUD property, and the wholesaler's contract that they wanted to flip that day, for a huge amount of profit, they wanted to sell it to her for $174, and the actual property was being listed for $135. And I said, let them fall out of contract, and then we'll turn right around and work with your buyer, put her back into contract. She's a real estate broker, so put her back into contract at the $135. Then we can come in and help her with the finance. I hate wholesalers. Just can't stand them because they like cheap people, And it's illegal to sell a property, is it not, Bruce, to sell a property you don't own?
Well, you have to have some interest in it, you have to have it under contract.
Yeah, I mean,
Old saying in finance, he who sells the wisdom business, soon must pay
and Kenyon can address this question. Most lenders want that title to be seasoned, right?
Yeah, contract flipping used to be pretty common.
Yeah, I did it back in the day.
Sure, a lot of people made a lot of money, but now, they want a little seasoned on the contract. It still happens, but it's not as prevalent as it once was.
Right. And so this particular contract, according to the title company, has to be seasoned because of the way the deed's written and the way that it's conveyed by HUD when you buy a HUD property. They never disclose that to the buyer. It has to be a 6-month season on the title before she can flip it again. Well, basically, you have the wholesaler that's going to flip the title in one day, or an hour actually. They take possession, they get title, and then it goes to the end buyer. But when she sells that property, a conventional lender is going to look at the title search and go, wait a minute, it hasn't had, there's something wrong here. We had this little ownership flip on the same day, and they usually will back off of it, which means she has to hold that property for 6 months as opposed to just 60 days or 90 days, because it's a simple flip.
What makes a wholesaler, just out of curiosity, what is a wholesaler? Is it someone who's just tying up?
I don't know either.
Oh, you wanna answer that?
That's Jesse, that's.
Oh, that's Jesse.
Yeah, a wholesaler is somebody who goes and finds a home that maybe an owner's willing to get rid of for $100,000. And they'll go around to other buyers and try and get $150,000 for it. They'll tie it up in a contract and then basically try and do a double closing in one day and make $50,000. And people do it, but a lot of deals get.
I'm sorry?
They find the deals and they sell them to investors for a percentage.
Yeah, you're gonna find wholesalers that are gonna be circling these guru camps. They're participating in them, looking for innocent investors. I just don't like that model. I'm sorry?
It's stupid sellers.
And stupid sellers. It is naive.
Kind of naive.
Yeah, very naive. So, other questions?
What's the worst deal you put together?
In my life?
No, in the last 5 years.
Oh.
I'm not talking about marriages.
I don't know that I have a worse deal.
Foreclosed.
That, that a loan that we made? I would say probably the worst deal that we did in the private Austin funds would have been some office buildings that were being built outside of Houston that we had to foreclose on. Mainly because there was mortgage fraud involved.
At least you got to foreclose.
We got to foreclose.
Because
and
others were, bankruptcy just tied something up for a couple.
Right.
That was a new construction?
That was new construction. And sadly, a wholesaler was involved as the point man here in Texas, and the investors were all Australian. And so these Australian investors put in, I think what came out was, and there's not, we didn't do this, they had put in some $3 or $4 million for a $1.5 million project, and that wholesaler made that spread.
He finally stopped returning phone calls
And yes, Bruce was the attorney involved in all of that, so
for the initial loan.
yeah. It's, that would probably be the worst deal that we had ever done. There's a lot of, it was discovered as you dig into it after the fact, you hear more about it. That's why I really don't like lending. Mortgage fraud is it's more easily done in the private lending world than it is in conventional lending world.
And do you think that do you think that some funds want to take out properties?
Oh, absolutely. I know fund managers all the United States, and the first question, and Robert and I, when we would underwrite a loan, the first question we would ask ourselves, do we want to own this property? Because it's an asset-based loan. And if we say yes, we'll move forward. If we say no, it ends there. We don't look any further into it. First question most fund managers will ask, do I want to own this property? Because chances are you're probably going to foreclose on it. So the same lender that gave us Everest just called me yesterday, and he's got 6 other properties posted for foreclosure in San Antonio. Same borrower, complete idiot that doesn't know what they're doing.
Single family stuff?
All single family. So we're picking them all up, and we'll be doing them moving forward.
Adding handrails.
Adding handrails. Taking out the double door and putting in a single door so we can add the handrails.
So how many different funds do you manage?
This is it. I no longer manage the private Austin funds. Robert is perfect in that position. He loves numbers. He loves being a banker. That bores the crud out of me. I mean, anyone that's known me a long time, I'm a builder, and I love the deal. I love to build things. Not necessarily build houses. I'm talking about build funds, build businesses. That's what I enjoy. I mean, those funds are, they're $70 million now, Bill. assets under management, private office, about 70 million. They're stabilized. They're not gonna build much greater than that. It's a great management position for someone like Robert, who is an accounting person. He loves the numbers. It's not my thing. This is my thing, real estate, getting dirty in the deal, you know? And there's more money here. I mean, our securities attorney is so impressed with the business plan, he's now shared it with other fund managers who are now considering adding a second fund to their management, something like this. So we're on the cutting edge, once again, of how to do a private fund. And I guarantee you, I will say that, I'll share this with you, in discussing with the immigration attorney and with our securities attorney, we will be the absolute first fund, the first Reg D fund, that adds the component of the EB-5 program inside the fund. And that's gonna just be, we're gonna be like their poster child. And there'll be other funds that will be copying us. I already teach fund managers how to manage funds now on a national level. Now I have something more to teach them. So, EB-5, a regional center takes anywhere from 12 to 18 months to get set up and established and get approved. You know?
And that's to take foreign investors, right?
Yeah, that's to take in foreign investors who are looking for a quick, streamlined approach to their green card. Yeah.
But if they don't want to green card, it's still good.
They don't need to go through the EB-5, they can just come straight into the fund. Mhm. If they don't want the green card, there's no, you know, there'd be no purpose. You know, this young lady here is very involved in the EB-5 program. She's got investors that she places with these people. So she knows it pretty well.
I don't know it, I just know how to raise the money.
Well, we're gonna talk to you about raising money for us. But, and then Hector, who is an investor in the fund and an investor in the Pride of Austin Fund, he's got contacts in a number of other countries who would really like to have this program. And so I'm going to work with him closely to make sure that we create a program that delivers the needs of these foreign investors. Right? Well, Hector's gonna make some money.
We're gonna at least have some fun in South America.
Pardon me?
Or at least we'll have some fun in South America.
Absolutely. Who wants to go to South America vacation on investor relations? You know, let's go.
We're in South America. All over.
Peru, Colombia, you know, mainly, but pretty much in Bolivia. We just got back from Bolivia.
And Mexico.
In Mexico, and Strick and I have traveled together quite a bit. You know, we went to Guatemala for a few days to, you know, get dirty and go caving.
Oh, nice.
Yeah, I'm seeing a lot in just my industry, a lot of foreign investors and foreign national investors coming to buy stuff here. You're kind of limited just through the conventional means. So having a fund or the option through a fund,
Yeah, absolutely. I mean, once they get here, you know, they're probably going to put more money into the fund. They're probably going to become a joint venture real estate deal with you or with us. I mean, if we build relationships with them for the long term, you know, way past my prime, whenever it comes, I don't know when it's going to hit me. You know, you guys, all you young folks, can take the ball and run with it. You know. And I will be joining the cruises with Barbara and Morris.
And in fact, in the El Paso sector benefited tremendously from the fact that there was, you know, some of it real, some of it just perception of a lot of days in Mexico.
Mm-hmm.
And because a lot of small business people, nevertheless, quite a bit of money in Mexico, were having such, you know, difficulties, you know, keeping their families safe. Or they just started, you know, they own restaurants in, for example, in Mexico.
Mm-hmm.
What is, they just opened up a restaurant in El Paso and they're qualified. And so they open a business, they create some employment, and their family move to El Paso where they forsake them.
Mhm.
And that, just the numbers are really incredible for the people that do that.
Yeah,
But this would have been an excellent vehicle for them.
it would have been, and it still
would've been
is.
A restaurant that had to manage.
Yeah, I mean, I don't want to tell anything out of turn, but I believe that in your knowledge of working with EB5 investors, their returns are usually less than 1%, right? Well, that's great, that means that the managers are making an awful lot of money off them, but I'm gonna make sure they get a reasonable return by going through our program, which our immigration law firm says they will be knocking at your door trying to get in your program.
Some of those investors are having to take losses.
Many of them are. They do it for the green card.
Yes.
They're not really doing it for the investment. They're buying a green card. But why not build a relationship with them that is a positive investment and they get the green card? And then they stay with you for years to come and they tell all their friends about you back home. That makes more sense to me, to build that relationship. I'm not greedy, so that just makes sense to me to do that. It's gonna be a fun program, but it's gonna be bigger projects than what we'll be doing. I mean, these are apartment buildings, hotels, strip centers, shopping malls, that kind of stuff, condo buildings. So, other questions? Yes, John?
These other potential funds that you may have to add in the future to accommodate these kind of projects, are they gonna be open to investors, or are they gonna be kind of a private deal for?
The way we think we're gonna structure it is the ALIS REI Fund 1 will own a piece of every fund that's created. So rather than invest in multiple funds, just keep your money as an American citizen, keep your money in Fund 1, because it's gonna have an equity participation in every one of the other funds. In other words, it's another income stream. It has to be distributed to the investors. I mean, honestly, I don't see why we couldn't count on that 12 to 15% range on our returns. I can't guarantee that. That would be illegal. I'm just saying that my forecast is in that 12 to 15% range back to the investors. Minimally.
What do you call the return? Is it interest?
It's a distribution.
Distribution.
And how your accountant frames that is up to your tax advisor. I don't know how you do us, Austin. We're just a distribution and it's treated as ordinary income, right? I'm sorry?
All those K1s went out.
As an ordinary income. Whereas on this fund, it could be, we might be able to get away with doing capital gains to save taxation. That's the hope. We're going to try that. Anyone else? Well, thank you all for coming in. And if you have questions you want to ask privately or to myself or any of the team members, feel free to do so. Otherwise, thanks for coming. I'd like to see you come May 21st if you have an interest in learning about retirement.